Okay, so what's going on with the Indian market is making everybody really nervous because we had a decent week and, we were all like, okay, this is improving, it's getting better, but today we've seen a cut. There's been a fair amount of profit booking, which basically means that people who were waiting for the market to come up a little bit, they saw it come up to a certain point and said, okay, let's just like quickly take some money off the table. And that profit booking normally happens depending on the level of the market. It's a temporary thing. But we had a sort of like a 5-day run up, which is a pretty decent run up, where the market went up consecutively for 5 days, which is a great thing. And then there was, the brakes were slammed on it, and there are various reasons for what is going on in the market right now. So what I've done is I've tried to put all of that information together. We go through it together. I'll share my screen and we'll read all of these articles together to understand what's going on in the market. Before I go further though, I must say this, I am not giving you any advice on any specific stock. I'm not telling you whether you should buy or sell or whatever. The idea is to just go through all of the information and understand the stock market a little better, and we can do that together, right? Let me just share my screen now. We'll look at first the Reuters website to look at what's going on here. This is what's happening, and this is the Reuters article for the day. Profit booking slams the brakes on India's stock rally with tariffs looming. And I love the way that headline is written because it's got the whole story in that headline, right? So profit booking, because obviously we saw those stocks go up a little and then boom, it just fell into that nice juicy layer where people said, oh, we've taken enough money off, it's time to take some money off the table, because everybody was reeling from the losses that they were holding for a while. So what you're looking at on your screen right now is the Nifty today. And if you look at it from just like a myopic point of view, it looks bad. But if I were to take you to the last 5 days, and this is the last 5 days of trade, you will see that it's actually not been so bad. So this is today from here onwards that we're looking at. It's not as bad as it's being making out to seem. So obviously, let me take you through a slightly longer chart. This is the last 1 month. Remember, Marvelous March is what they were calling it. This last cut is what we're looking at. So the question is going to cut further, is it going to stay here? But if you look at it from a 6 months point of view, and this is interesting, right? So if you look at the high, which was in September from a 6 months chart, and where we are right now, there's still room for us to recover those previous highs. And there's no reason for us to believe that those previous highs are not possible. The question really is, in how much time is that going to happen? And as the Reuters article pointed out, this little last bump downwards that you see right now, I like playing with the chart. The last bump downwards is about profit booking, where basically people are coming off this, the 28th of February, come massive cut, and you're like, oh my God, I've lost so much money. But now some of that money has come back. So people are taking money off the table and they're saying, okay, let's quickly take some money off before it goes away again. And that's the profit booking that you're seeing. So it went into that space. Now, I found a really interesting article. This one is on the Times of India website. Goldman Sachs saying that the worst is likely behind us. And there are various reasons for why Goldman Sachs believes that the worst is behind us. One of those is that it anticipates 6.4% GDP growth in the second half of 2025. Now, that's an interesting thing. I must also point out that there's a lot going on in the world. As if you've seen my YouTube, we spend a lot of time talking about Donald Trump, right? So the 2nd of April is a tariff deadline for India and a couple of other countries. Remember, Donald Trump has repeatedly pointed out that India's tariffs are too high. India needs to sort of rationalize those tariffs. Otherwise, we're going to come in with reciprocal tariffs. And this has sort of been swinging at us for a while now. But a lot of the voices in the market are saying that they're happy about the fact that the Indian government appears to be playing ball. So like the Americans would say, it's constantly made offers to find solutions out of this. So it's not sort of digging its heels in, but it's working with the American government and saying, hey, let's find out. Today there was a buzz story, so it was not confirmed, that India is looking at cutting tariffs on bourbon whiskey that gets imported from the US by 50%. Now, there will be a lot of people who are happy about cheaper whiskey, but there will also be a lot of people who are happy in the stock market, meaning that, okay, so India is not fighting the US, so which means that, things won't be so bad, and that is good news for the stock market. But that 2nd of April deadline is looming, and it could go two ways. But we've also seen how Donald Trump has played these tariff let's call them threats for the want of better words. But when the deadline comes closer, he's pushed those deadlines quite a bit. So it could turn out that the 2nd of April is just another day, and nothing happens, and he just moves it by another 3 weeks to give himself more room to sort of negotiate or stare down his opponent. In this case, India, and India not really, going into an opponent sort of mode, which is giving the market some comfort. So that's one among the things that's, leading people like Goldman Sachs. We're going to come back to this article, leading people like Goldman Sachs to believe that the worst is over for the Indian economy, and we're showing stronger numbers. Now, let me just take you through some of the reasons that they have provided, and they've basically said that they are expecting better, earnings from corporate India. There's the FY26 earnings, so that's a financial year that is starting now 1st April. The earnings per share projection have decreased to 7% across the market, but there is a sense that the cycle will move on, and we'll be in a bit different, we'll be in a better place, and also with the income tax, sort of relief that's come from the budget and the RBI reducing rates, there's general hope that we'll see a stronger economy, and that is something that the market is cheering about. Let me just take you through what this is what we're looking at. So this is a slightly larger chart, right? And what I'm taking you through is the stocks of the Nifty 50. So these are the biggest stocks in the market. These are the large caps. And as I scroll, and you can go to this, I'm looking at it on the moneycontrol.com chart. You can look at it specifically, but as you scroll, you'll see most of it is in the red. It's because the big stocks, which had actually seen a beating, have come back a little bit over the last 1 week, and people have sort of booked profits in these stocks. If we take, and I'm sorry that my laptop's a little slow today, but if I show you the mid caps, you'll see the mid caps have not cut as much today, because there has not been as much profit booking among the mid caps. So it's really profit booking in the large caps that we are seeing. Just give it a second. It's the screen sharing thing that tends to slow everything down. There you go. Sorry about that. And if we look at the Nifty Midcap 100, right, you'll see that it's not all, it's a bit checkered. It's not all red, which means that they've not all received massive cuts today. The profit booking has really happened in the large cap, where people have taken the money off the market. Now, there are other reasons also why, there's a general belief that we're going to see, all is not bad, and we've seen this big cut today. Oil prices have reached their highest point in the last 3 weeks, as crude values have increased on Wednesday due to supply woes. Remember, the US is actually in a conversation right now with Russia and Ukraine, but we've not really seen too much of a breakthrough. There's also stricter controls the US government is actually putting out on Venezuelan and Iranian oil exports as well. So Brent crude futures have actually reached 73.22 a barrel. That's fairly high. So there is a point of rising crude prices that you can see. The second number on the chart that I'm showing you right now, this is Brent crude, and it's because crude prices were higher today that the Indian stock market took a bit of a cut, and that technically on a slightly longer medium term is not something that we need to deeply worry about, at least. The other interesting thing that's happening with our market is the rupee. The rupee has actually shown some strength, and that's because there's uncertainty on the US side in their market because of the whole tariffs, and people are not really sure whether the tariffs are going to lead to maybe recession being a too big word, but if the tariff is going to sort of cut the American economy at the knees. So there's uncertainty in the American economy, and because of that, the Indian rupee is doing well, and that's one of the reasons why our stock market will cheer. Because remember, when we were talking about the market coming down, we said it's because the rupee was weaker, and here the rupee is looking a little better. And all of that generally leads to FIIs coming back. Now, here's the other thing. In the last 1 week, we talked a lot about FIIs coming back into our market. And normally when the FIIs come back, they come back for a bit. It's not just a 1 day, 2 day thing. So if the rupee is stabilizing, it allows confidence to foreign institutional investors, especially emerging market funds first. Emerging market funds are the first to come back. They'll likely come back to the Indian market as well. A really quick look at global stocks as they stand right now. I'm looking at the Reuters website. You'll see that Japan, Hong Kong had a pretty decent day. Shanghai was down, although not by too much. And, the FTSE, I think, is not open right now, but FTSE's had a pretty decent day as well. The American stocks were up, and these are all good cues for the Indian economy as well. So fundamentally, this is what I think, and we'll just stop the sharing for a second. Fundamentally, this is what I think, right? There has been profit booking today, but this is probably a one-day thing, and most of the indication is that the Indian market is looking stronger than it did maybe last week or a couple of weeks ago when we were feeling those really bad cuts. And this profit booking is probably a temporary thing, and we've got a lot of reasons to cheer in the medium term at least. So if we look at it from a slightly wider picture, it does seem like the uptick is in a good place, but we'll have to keep an eye on global markets because the American market is being so unpredictable, and that sort of gives us a lot to worry about. Okay, so finally, we'll stop sharing the screen, but let me know what you think of the Indian market right now, where you are as an investor, and if you believe this is something that you'd like to continue investing your money in, what is the colloquial advice you're receiving on the ground. Really leave it all in the comment section. We start a discussion because that should be a fun thing to discuss today. All right, so you have a good evening, enjoy the IPL and whatever else you're watching these days, and we'll come back and keep looking at the markets.